Welcome to yet another edition of the East African Focused Debates. This discussion focuses on developing capital markets in the region with an emphasis on opportunities and challenges facing the industry. CNBC Africa moderated an interactive session with industry players to map out the means of creating an ecosystem that engages both regulators and market participants.
All the research does point to capital markets painting a very good picture when it comes to economic development, and Rwanda is no exception, let alone the East African community. Give or take, you're looking at 18% growth the moment a country, well, in the past 5 years, the moment a country does establish a functional BOUS. We're very pleased to have Mr. Robert Matthew and Celestine Rabukumba, not forgetting someone from the private sector, both of them from R-Switch, and Mr. Dorotich, not forgetting Isaac. My name is Arnold Zago. I hope I pronounced your name right. Isaac. First of all, let's begin this with original BOUS. Is it time for us to see original BOUS when harmony is something that we're yet to achieve as the East African community? I want to pitch this to Mr. Celestine Rabukumba, the CEO of the Rwanda Stock Exchange.
It's a high time to have a regional capital market and a regional stock market. As of having a regional policy itself, that meaning one stock exchange, for example, I think it is far-fetched. I will give a few reasons for that. The way we have chosen to integrate our region so far, from the way I look at it, is that we are integrating our region by way of linking. Also central banks. Today, we are not talking about one RTGS, that's the real-time settlement system. We are talking about an RTGS system in Rwanda, another one in Uganda, Tanzania, Dar es Salaam, Nairobi, and so on and so forth. So that is for the payment systems. So these banks have decided to link. They have not decided necessarily to integrate. So when it comes to capital markets business, what has happened is that the capital markets have also decided to link through regional directives to direct what is going to happen, what is going to direct the regional business. For the stock exchanges, no one has agreed to let go their hard-earned infrastructure so that they can have one single platform to trade through. That means NSE is on its own, DSE is on its own, and everyone else is on their own. Same thing has happened for the for the settlement systems, that is the depositories. So now the talk is to link them by technology. So you will still achieve the same goals of raising money across the markets. Of course, it's not necessarily the most efficient, but it's one step towards that direction. Because there are other things also which are governing that. Because companies in the stock exchanges, for example, not all of them are demutualized. So there's Rwanda Stock Exchange is fully demutualized. Nairobi Stock Exchange has done that. Dar es Salaam is in the process of doing that. Uganda is in the process of doing that. So the timeliness of that regional single pulse will depend on a business decision. So at the time, at this right time, it's not happening. So it will depend, it will be informed by probably the business decisions.
Thank you very much. Mr. Matthew here. Agriculture does contribute 33% to Rwanda's GDP, and is it time that we actually brace ourselves for futures to start with? This dates back to the 1800s in the US, where corn was being sold 3 months, 6 months before, basing on futures. Is it time that we actually braced ourselves for futures? Because let's face it, it does contribute a whole lot to our economy.
Yeah, thank you very much. I think that's a very pertinent question. Here we are talking about the commodities market, and the commodities market is actually a big opportunity for Africa. But it is surprising, maybe I should be asking the whole room this question. How come we have not seen a successful commodities exchange yet in Africa, outside South Africa? That's a big question we have. However, we have a commodities exchange in Rwanda. I think it is one of the very few, one of the three we know of, go forward for it. Outside Ethiopia, Botswana, and South Africa. And the focus of this commodities exchange is to serve both domestic market and the regional market. And the commodities market normally have two levels. We have the spot market, which is in existence, but is completely not organized. Whereby if you go to any sub-Saharan African country, you will find that many commodities that would qualify. First of all, many commodities are traded in markets, and in many of these countries, there are initiatives to try and organize those markets in such a way that the ultimate producer benefits by making sure these prices are shared. But coming back here, the East African Commodities Exchange has actually been working on, first of all, putting what we call collateral management, warehousing system, logistics, and so forth, and to have a platform which would run on which the warehousing receipts would run on. And the importance of this is that the commodities that are traded in the commodities exchange, in terms of description, must be exactly what is delivered to the ultimate buyer. Then the next level is whereby now, after establishing the standard and processes, we can have what we call the futures market. And basically, futures markets are markets for trading contracts. In many cases, there may not be any physical movement of the commodity. So yes, it is timely for the agricultural sector to benefit from this, but also I think there is an issue of commodities, the type of commodities that would be tradable in a futures exchange, because not all of them are tradable. And so when we look at the commodities market, futures market, yes, in Rwanda, the Capital Market Authority actually regulates the commodities market. But our regulations mainly focus on the futures market part of it, the contracts part, which has not actually started. And we hope that once the EAX has developed the spot market to be more efficient, then it will be possible for the contracts to start trading, to be able to support. And the whole idea about commodities market is actually to help in the risk management. And that's where the capital market becomes important, because the contracts guarantee prices to those who are buying, to those who are selling actually, and those who are also buying in the market.
Just one question to Mr. Torotich. You happen to be CEO of a company, that's Kenya Commercial Bank, which is cross-listed, listed in Kenya and also listed in Rwanda. And this poses some questions, because Forex exchange, FX, happens to be a very big market when it comes to the capital markets and bourses. Why? Because by 2009, you're looking at 3 trillion being traded on a day. At least that's globally. So tell me, in your view, what approach do you prefer when it comes to FX? Do you prefer a fix? Do you prefer a free float? Do you prefer a hard peg? Do you prefer a soft peg? To talk about remittances and revenues flowing across East Africa.
Well, that's probably a fairly complicated subject, but the way to possibly respond to it and I'll probably just take this opportunity before I make a comment about that, KCB is part of, KCB Rwanda rather, is part of a bigger KCB group that operates in the whole of East Africa, for who may not be familiar with the bank. Presently, perhaps, if you're looking at it from an asset point of view, the largest that we have in the region. East Africa, and when you look at all the economies in East Africa today, the economic policies are such that we are all espousing a free market environment. So going by that, the implication is that we should actually be having a much more freer market environment, and therefore allowing currencies to trade according to the market dynamics that operate in the region, following the market forces of demand and supply. However, the reality of it also is that, and I think there was some mention earlier on that, in all our economies in the region, we are all running, very large current account deficits. And that means that if we were to allow the currencies today, to trade purely on the basis of demand and supply, then chances are that we would actually see the currencies move widely, against the local currencies, and which is why the monetary policy institutions, without necessarily issuing directives about where to peg exchange rates, would give or would intervene in the markets by applying national reserves to moderate, what you would call, unusual variations in the markets, to be able to smoothen, the devaluations that we have seen in the currencies. I think it's fair to say that in the whole of East Africa, over the last 1 year, all the currencies have depreciated, just like all the other emerging market currencies. But, if you look at the depreciation rate of the currency, for example, in Rwanda, given the size of the current account deficit that we have, one might say that Rwanda is actually a very good case of a situation where, on the one hand, we allow the free forces of demand and supply to operate in the currency markets, but at the same time applying, the monetary policy instruments within reason to be able to manage, the devaluation of the currencies. And this is important to do, for social reasons especially. That, we are a very import-dependent economies, and therefore the societies, to a very large extent, depend on, import from the region or from, beyond the borders. And so, there's a certain element of social responsibility to be able to allow the free forces of demand to apply, but at the same time, applying caution and managing, the day-to-day, year-to-year devaluation of the currencies as we have seen, in Rwanda.
Thank you very much. I want to pose my next question to Isa from African Alliance. I want to take this to the Eurobond. Oversubscription has become synonymous with Rwanda when it comes to bonds, which happens to be a success story for much of sub-Saharan Africa. But many of the critics have mentioned that with the Eurobond comes an increase in national debt. And I don't know what your take is on this, especially from your perspective. I have happened to interact with Celestine on this countless times, and Mr. Matthew, please indulge.
Okay, first of all, it's true that the Eurobond was a success, and that success not only stayed on the government of Rwanda, but on the rest of the country. I can say that with confidence. We had our annual conference, regional annual conference, a bit after the Eurobond had been launched, and everybody was very interested about Rwanda. Now, in terms of increasing the level of debt of the government, I think that as practitioners, and especially dealing with the local market, having to do with the equity and then the debt local market, there isn't much impact on our daily operations or on our relationship with investors. The only thing that it opens up it opens up the local stock exchange to the rest of the world, okay? So people who had not really thought about Rwanda in one way or another in terms of investment, seeing such a product on the international market, looked a bit closer to our market. Now, if we come back to our local market in terms of debt and equity, we talk about debt, since it's again the government borrowing, this time locally. I think that for such a product like the Eurobonds to have an impact on the local market, that's where we would talk about the GDNs that have been discussed by one of the panelists before. I would assume that having been successful on an international stock exchange, people will be interested and have confidence now that they can invest in the local papers, given the right infrastructure, and that being a very good one that as a local broker we're looking for.
Thank you very much. As a local broker, that is a very interesting conversation. Of course, with bonds and ease of payment, that's where we bring in our switch and Mr. Celestine. Are we about to see more interaction when it comes to payment for many of these principles? Let me give you an example. Kenya right now is rolling out the Emakiba, which is in the final phases. I'm very sure, Celestine, you know much about this. And if many of you do not know anything about this, Emakiba is going to be a bond issued by Kenya, and you can get this on mobile money. So if I have mobile money on my cell phone, I can actually pay for this bond right here. I don't have to go to the Central Bank of Kenya to actually pay for this. And you have the platform right now as we speak. Celestine here has the signature, not forgetting Mr. Matthew. When are we seeing this triangle happening to just evade all the roadblocks?
Thank you. I think Emakiba is timely in Kenya. They've been developing it for a few years. Now it's coming to fruition actually in the next 2 months. They are going live. It's a more developed market. So at the end of the day, someone has to be a KYC, which means that these people will still have to go through a member or a bank or something so that you know who is investing and who is doing all that. So now for us, that will come from automation. It's something we are looking into. Actually, I must say that our automation is very near. We are partially automated on the settlement side. Actually, we have one of the best settlement systems in Sub-Saharan Africa because our settlement process is linked directly to the payment systems of the of the central bank. And our transaction will take place in central bank money. So the whole 9 yard, actually the whole supply chain value chain is protected. However, we are still, of course, again trading manually, which is another reason why we may not be doing Emakiba before we even automate the process which is existing. The whole STP, that is straight through processing from trading to settlement to the back office. So the whole value has to be automated first. But in terms of working all of us together, definitely we have had discussions with RSwitch, and that one is continuing for the near future. Our automation is going to be full automation hopefully by end of June this year, finally. So we have a trading platform, but what we are working on is to link it to the settlement, to the central depository of the central bank.
Maybe if I could just add to Celestine's comment is that I think we've been also working on developing layers on the platform to provide more value. We're more of a B2B2C kind of model. So my clients are the banks or the financial institutions. So what we've been doing is onboarding as many financial institutions as we can because we are the back office. We do not want to step our ground to the end user. I think that is the position of the bank. So we support the banks in actually connecting themselves, similar to what a SWIFT system would be in terms of trade, international trade. Assume this world here is our little world, and we would be the SWIFT for all channels, all schemes. And the interaction that we would have is for example, if I was to connect to a KCB, which we're already connected, by the way, in terms of the card, where a mobile platform, their mobile banking would be connected through our switch to another entity that resides at another bank or another financial institution. Our settlement is also, we are outsourced by central bank as the only PSO. It's a payment service operator. So we do the clearing, authorization, settlement, and dispute resolution for all channels, all schemes. So that enablement, I think, when we build a layer on top of that, is first let's get everybody in the bus before we can discuss about the seeding, right? And this is what we were discussing with Madhu earlier, is that we have the SACCOs that are just, computerizing, and I think they should be done Q4 of this year. We intend to connect them to the ecosystem. So you'll have all these store value accounts sitting in the country with a mobile channel will have the same enablement to actually purchase bonds or whatever securities that the banks and the bourses are actually offering. We ourselves are just a pipe, and we enable through the fintech technology that we develop. Thank you.
The question I have is in line with what the Prince said, mainly looking at new innovations for the capital markets, specifically looking at crowdfunding. Now, when I talk about crowdfunding, literate crowd or high net worth individuals who are looking to access some, take for example, real estate asset class. Is that something the capital markets regulator has been looking into? And from a stock market perspective as well, is this something that you've thought about? And also R-Switch, I know this is within your industry as well. Is it something that could work within the context of what you're doing now? Having a crowdfunding platform that enables high net worth individuals or educated investors who, based on what the compliance and guidelines are, have to meet some of those guidelines to be able to invest in such platforms.
I think maybe I'll just speak on that payment part and leave the floor to you. It's really, we really have a partnership with the financial institutions as a platform provider. All the KYCs are done through the bank because that's where we want to keep the money. The higher the liquidity, the better it is for everybody. We're just a pipe that will enable movement of money, of e-money. So what we do is we connect all ecosystems together and let them interact. So in a nutshell, for crowding, they will have to have a bank or a financial institution that they will have to home their money in. And then from that point, we can facilitate whatever institution it is to move that money. But I would suggest or urge whatever group to keep their money in a banking institution, because I think that's where there's less redundancy. I think they should be well capitalized. That's number one if you're going to deal with large funds. But I think Maurice would probably be, since he's working with the bourses and is a commercial bank, he would probably be the best position here.
I think one of the realities that we are faced with, not just in Rwanda today, but in the region in general, and I think it was alluded to earlier on, that the sources of funds are limited, the needs are very large, and different types of needs that we have in the market. But more importantly today, I think with the East African population, moving towards, middle income, range, implies that you have a critical mass or continuously many number of people with money that is looking for an investment or a return. It may not be in a very sophisticated capital market or stock market environment or futures and so on, but basically, surplus funds that requires that they are invested in a professional, in a manner that diversifies risk and ensures return, in a foreseeable future. And therefore, the market is very ripe for whether you call it crowdfunding or whether you call it unit trusts or whether you call it, SACCO, as we call it in this part of the world, or as you go to Kenya, we call them chamas. So basically, a group of, initially people who know each other, coming around together and, making a bet on a project, initially starting very small, but slowly and surely becoming very big. Some of the investment projects that we see in this part of the region, now owned by, groups of people putting resources together, becoming very large themselves. And so I think that the market is ready for that already. Now, whether we have the appropriate legal framework or judicial systems to deal with disputes or market challenges that may arise, I think that is something that Robert will probably address. But yes, my sense is that a lot more of people who have savings that are looking for a return today are moving beyond the traditional fixed deposit or the saving account that we see in the bank towards much more longer term, much more risk-oriented investments that you would see generally giving a much better return on a more longer term basis.
Maybe if I just clarify that when you refer to crowdfunding, you are talking about P2P lending, P2P equities. If that's the case, then yes. This is a very new phenomenon, and I think it has succeeded after a couple of years of struggle, specifically in the US and the UK. Australia is also coming up, has come up very well. We've been looking at these different markets. They have got different, they have different policies and regulatory environment from their own experience. For instance, we have from the extreme, which is the US, which is very, we come up with very tight regulations, especially concerning minimum capital requirements and KYC issues, to the extreme, which is Germany, which does not at all regulate P2P lending specifically. So these are platforms, and I think these are emerging along the same way that we are having these game-changing technologies that are coming to the market. P2P simply means that two individuals are able to lend or borrow from each other directly without going through a bank or financial institution. They meet in the platform. And it's been, there are some, let me put it this way, there are some what I can call success factors in it. There are risks. We've had experiences in markets where there have been defaults, and the products are usually packaged like you would package a bond in the market. So there is KYC. You go into a platform. If you have a business that you want to fund, a small business, and then you float the business on the platform, and people who register in the platform are able to see maybe you are looking for only $100,000 or even $50,000, and each of these investors come there, they are able to lend you $10, $50, and so forth. And it's coming up strongly, but it has its risks. So from the regulatory perspective, we are looking at it, and generally for Rwanda, we are working on the policy, and our thinking is that we should be able to put in place a regulatory environment that encourages innovation. So we will not be expected to put in regulations or rules of the game, but just policy initially, because it's a new area, and we would expect that people who are interested in investing in that area should be able to come in and come up with proposed rules on how they intend to do it, because already these are electronic platforms and they already exist. they already exist, so we don't expect people to come and reinvent, but they are free to do it. So I think that's what I can say, and as it was mentioned, Rwanda is very ripe for crowdfunding. It's upon the financial services providers who see it as an opportunity to come, to get on the ground in Rwanda and actually mount a crowdfunding platform.
I think, as a stock exchange, we are a private entity with public utility service provision. So as a business, we provide a service. This is something we are looking into seriously, among other products, of course. Crowdfunding is a phenomenon which is new, like Robert has put it well. So we are considering and watching the space, because after the policy is out, we will be coming up with a strategy for it. Since of course they cover mostly SMEs, and 90% of our businesses are SMEs. They are the biggest providers of employment in the country. So it's something we are looking at. Of course, also I will not fail to mention the Islamic finance, because it's equally important when you're talking about innovation, because we've had investors before who refused to buy into the IPO. Our most successful IPO was Bralirwa, when we were launching 5 years ago. That is the brewery here in Rwanda. And people were not able to access that because we did not have any Sharia compliant anything around those things. So those are some of the areas we are looking at. But of course, the issues of governance, disclosures, and business sense, the reality, actually the bottom line, you must have a business case. So those issues, we must be looking at them at the same time, whether you are small or big. But innovation, very important, but it becomes more even important where you draw the line between the technology, the cost of that technology, and the value addition it's going to bring to you. Because sometimes, we run after technology or some other innovative ways which may not provide the right, do not add the right value you are looking for vis-a-vis the cost it's causing you. So all those things we look at them from a business point of view and do proper research about it and make a sense of all that.
My first question is for Mr. Robert. You mentioned earlier about the commodity trading platforms. I remember I had a meeting about 2 years ago with Madame Jendaya Fraser, Anthony Lumelu, about the Apex trading platform that they wanted to create in Rwanda. I'm not sure if that's the same thing you're referring to, and how far has that been developed?
Thank you, Randy. The EAX actually acquired a NASDAQ platform which has the capability of trading equities, bonds, and derivatives, including FX-based derivatives. What happened is that I think when they started, they focused more on developing the spot market. So right now they control most of the commodity warehouses for agricultural products, and the next level now is a project they have with the Rwanda Stock Exchange to enable the same platform that is trading commodities to trade equities. And the moment they connect after the automation of the stock exchange, the moment they connect the trading platform with the central depository at central bank, then these other products can be able to run on it. So that's where we are, and I think the outcome of ultimately trading the product that will be traded on that platform will be determined by the completion of the automation which Celestine referred to earlier. Thank you.
Thank you very much. And just a comment or a recommendation, or perhaps you can call it a proposal. to the local banks here, maybe KBC and Bank of Kigali. I don't know if there's still somebody from Bank of Kigali here. What we do sometimes propose to certain financial institutions is that from a risk diversification perspective, because we manage portfolios of funds that are more prone to take risks, but we know that there's a big gap in the lending market for young entrepreneurs, for startups in Africa. They really struggle a lot. They don't have collateral, they don't have 30% to put down, and so on and so forth. And because there is not a mature angel investors network in Africa, they found themselves in situations where they can never take a project off the ground because there's simply nobody to give them the money. Not every African country has sophisticated online platform for crowdfunding. So the solution we found is that on a case-by-case basis, we come up with a proposal to some of the local banks to say, look, we would like to establish in partnership with you under your management a special fund that will be funding those small projects, the 100,000 to the 5 million. So if there's room to create, to structure such partnerships under the umbrella of a local bank, that could be a solution to bridge the gap of funding young entrepreneurs and young startups.
Thank you. I think I have a question for you myself. I'm switching. That solution you are proposing is excellent, I think. Because when you look at on the ground here, small companies, they suffer. Actually, they are the best ones to grow. So the companies that get money are already there. So I often joke that I see some banks with an umbrella with their logos, but I think it's not right because you get an umbrella when it is no longer raining. That's from a bank's point of view. When it's raining, you don't get anything. It's raining when you are nowhere. So your solution could be good, but my question to you was, would that be a lending facility of sort, or it will be including equity debt kind of arrangement? Or does it have to be with banks alone, for example? Could it be any other institutions maybe?
No, it doesn't have to be with bank. It depends on the requirements from our investment partners. Some of them feel comfortable if the structure is created together with the bank because they think that the bank is a more reliable partner. In some other cases, we can just create a fund with a local private entity, which is a non-banking entity. So it's really on a case-by-case basis. And regarding your question, we create a ratio of debt to equity because it depends on the project. Some private projects, such as development of commercial properties that I've been looking at since I'm here, the owners may prefer debt, may prefer majority of debt rather than equity because they don't want to give out too much ownership of their property and so on. So really, we take it on a case-by-case basis.
Thank you very much. I wanted to ask Isa over there. Let's talk about some offerings. Many of the brokerage firms have tied themselves down to really the basics. Are we about to see any more offerings from venture funds to maybe environmental bonds, green bonds? I mean, the EDPRS of Rwanda does have becoming a green economy. So that is something that I would actually be looking forward to. I want to know what your take is on that.
I mean, as a broker, we would love to see that. So, I mean, in our perspective, we stand on two sides. So there is the issuance, advising the issuers. And then in terms of, we're not yet at the green bond level, but we've been advising several investors to take the bond route. You know that we don't have, we actually have 2 corporate bonds currently. So what we've been doing is trying to encourage our clients not only to issue corporate bonds, but even start with commercial papers, which would be a shorter term version of that, at least to start getting used to issuing papers on the market and convincing the appetite and so on. In terms of diversification, that's our role on the sell side. Now, on the buy side, the best we can do is to sell what is available, and we are not primary dealers as such when it comes to the central bank issuances. Speaking in general, for the brokers, the brokers, it's not, we are not really incentivized to take part at the primary level. But indeed, we have few trades here and there in terms of secondary market, and especially that's the bigger chunk of all availables, corporate and government bonds, are taken by the institutional investors, meaning the banks, RSSB, the insurance companies. So at the end, we are brokers for some of the SACCOs or the individuals here and there. But at that level, I think that the commercial banks have the lion's share. Now, in terms of issuance, we're pushing. We hope that we'll be able to see several corporate bonds, and then let's hope that they'll get a bit more sophisticated and to get to green bonds.
Thank you. Mr. Dorotich, according to PwC, by 2020, GDPs of economies will have a direct correlation with the banking sector. Now, what this means is it is time for us to actually embrace the banking sector, well, the ones who haven't already, and see how vibrant and what offerings the banking sector can actually bring to the table. Microfinance, as per the GDP of Rwanda 2015, grew by a staggering 31%. Now, what advice would you have for the likes of microfinance, SACCOs, and other banks that are not as big as KCB in diversifying the financial services in the near future?
Now, I think there is a saying, or there's a view that is attributed to Bill Gates that in the years to come, banking will still be needed, but not banks. Now, that says a lot. And just talking about the role of microfinance institutions and other financial institutions that might be called, banks in some way or other, is that they certainly have their role to play in our economies, because when you are considering banking the unbanked population, which today, I know in Rwanda we talk about 89% financial inclusion, but actually when you look at how much of the population is actually in the formal financial system, it's still a very small percentage, which means that we still have a very big percentage of people who are accessing some form of financial service, but actually not in the mainstream banking. And for me, the natural transition for people such as those in the rural areas, farmers beginning to get into the commercial value chain, is to work through the microfinance route and gradually upgrade into SMEs and corporates down the road. And the role of commercial banks, to a very large extent, and we do that already in this market, is to provide wholesale funds to the microfinance institutions to be able to serve, the much smaller deals that we see that are actually much larger in terms of number, and usually much more complicated. And the bigger commercial banks do not have the capacity and the skills to be able to manage such. But certainly, with the developments that we see now in technology, what we are seeing is that a lot more of the bigger banks are actually beginning to work down, their value chain to serve those unserved markets, particularly through technology-based lending platforms such as mobile banking. I was mentioning to someone at lunch today that in 2015, KCB in Kenya lent out $100 million in new loans through mobile banking last year alone, and that's huge. And that is talking about 10,000 Kenya shillings, which is just about 10 US, well, it's $100 to anywhere up to 10,000 US through the mobile phone. So that is already beginning to create a new revolution about how the bottom of the pyramid is going to be served. So yes, microfinance institutions or microfinance service, in the way we know it today, may not necessarily be the way to do it, but certainly that service will still be required, in the years ahead.
I want to throw the next one to Mr. Matthew. I want to talk about the correlation between monetary policy and the capital market behavior. First of all, if we do see a tight monetary policy, this is going to increase interest rates, worsening cash flows, ultimately worsening the interest rates. And we don't want to see that if I am an investor, because that will be reflected on my balance sheet. Tell me, what lessons can Rwanda learn from more vibrant capital markets, at least on Africa as a continent?
I think it's the other way around. What can the other African countries learn from Rwanda? With respect to what we are discussing today, that is diversification of services, Rwanda's capital market, and maybe I should remind everyone that what happens in the capital market is usually a reflection of what is happening in the underlying economy. So at the end of the day, it is the economy that makes the capital market look the way it is. If the economy is promising prospects, then the capital market will shine, and vice versa. And therefore, coming to your question, it's extremely important that the management of the monetary policy is key in terms of ensuring that there is stability in the capital market. For Rwanda, to be honest with you, we've not faced any major challenges from that direction, simply because things have been stable right from the beginning. Because at the start of the capital market project in Rwanda, there has been a very, very stable macroeconomic management. Interest rates have not been very high, although you are asking whether interest rates are getting worse or better. It depends again on who is asking, because if it's the borrower, worse means different from the lender. But things have been stable. Actually the exchange rate has also been fairly stable comparative to the rest of the sub-Saharan African countries. And that is the reason why most of the issues that have come to the capital market in Rwanda have substantially been oversubscribed. There has been a lot of interest from both regional and international investors, just because things have been done right with respect to macroeconomic, monetary policy management. I think that's all I can say for now.
Okay, the next one goes to Celestine. Should we be seeing more privatization, in your view?
I think privatization is a growth driver for our stock exchange, our young stock exchange. It's the primary driver actually in the short term. Even long term, anything government has that is making sense, we would really hope to have it.
East African capital markets still face challenges like low capitalization and liquidity, but progress has been made through removing constraints on capital transactions and harmonizing market infrastructure. Thank you for watching. I'm Boni Tunya.